And hello, everybody. If it is Wednesday, it is Blockchain Day for Black Blockchain Consultants. I'm Cherie. Welcome to Blockchain Chat and Black Blockchain Consultants. So within BBC, we do four things. Number one is we talk about different blockchain jobs that are available, specifically for people who are not technical and not coders. Number two is we talk about blockchain businesses you can start and grow. Three, we talk about investing in the blockchain and whether you're investing time or money in blockchain projects. And number four, I care about generational wealth for all of us. So we talk about that, how we can make money from this technology and then be able to pour it into other things that our grandchildren will be able to take advantage of. So if you would like to learn more about joining Black Blockchain Consultants, we'd love to have you. Our website is blackblockchainconsultants.com. There's a membership button there. You can see the benefits of membership. We have a lot of interesting conversations that go more in depth with Flock. And next year, I've talked to the officers about this. We're going to do more inner circle webinars where we really start going into depth. In fact, we're having our next one on Monday, October 22nd at 7:30. So this is only for inner circle members. And last week, Talisha actually made a very important observation with regards to, here we go. This is the innovation adoption life cycle for technology. Always happens where you have innovators, early adopters, and we within blockchain space now, we're in the early adoption stage, early majority, late majority, and laggards. And when Talisha said that we make money as early adopters by educating the late majority and the laggards, and we've seen that with the internet, with Facebook, with Instagram, people are making millions of dollars teaching others who aren't as technically inclined how to use those platforms. Well, we'll be able to do the same thing within the blockchain industry. So on Monday, October 21st at 7:30 p.m. Eastern Standard Time, we are going to talk about some top businesses that we can start that require minimal capital so that when those late majority and laggard people start coming in, we can take advantage of it. So another thing that we have coming up is our 21st Century fundraising discussion, actually a virtual conference. It's an all-day event. And Eric, do you want to share with everyone what is going to be happening on that day, Wednesday, December 4th?
Yes, December 4th, we are going to have our virtual conference dealing with tokenization, opportunity zones, crowdfunding, and the overall theme is raising capital in the 21st century. We're going to really talk about how all of these things can be leveraged, against each other, how the synergy that operates between all of them, how they can all work together. We have some great speakers. I'm really excited to, just to talk to some of these people. We have some platforms that are doing some amazing things in the space. So this is going to be a great time for anyone to participate, to glean and learn like some really pertinent information that is just going to make you, to me, just head and shoulders, especially as we move into 2020. So it's going to be a great time. I'm really looking forward to it.
Yeah. So one of the top issues that a lot of us as Black people have, Black entrepreneurs, is the ability to raise capital. And this is going to be for anybody. Doesn't matter whether the person is a blockchain enthusiast or not, or in the inner circle, anybody can come and you'll be able to learn about these things from our perspective. So the tickets should start going on sale in the next 2 weeks, hopefully. And we will keep you updated with regards to that. In 2020, we're going to Atlanta. Who's ready? So that's going to be February 16th and 17th. That is a Sunday and Monday. We're going to be in Atlanta for our next Black Blockchain Consultants annual conference. And on Sunday, we are tokenizing a piece of Black art, and Eric is going to be in charge of that. On Monday, we have Krista McFarlane, who is the CEO of Patientory, who is going to be our keynote speaker. And we're going to have a lot of other activities planned. So the planning team is getting together on October 14th. I don't know the time, but ask Tawana if you want to be a part of the planning committee, if you think you want to be a speaker, a panelist, MC, anything like that. We are looking for all hands on deck for the 2020 conference in Atlanta. And most importantly, don't forget to ask your bosses for the time off now. We don't want you to wait until the last minute, okay? Final thing is, in 2020, we are going to do our 20 cities in 2020 tour, where we want to have local meetups with people in various cities where our Inner Circle members are already located. So if you would like to host one of those cities, be a host city, please let me know in Flock or send me an email at info@blackblockchainconsultants.com so that we can start creating the schedule for 2020. Talisha, do you have any other announcements?
I think that was it. Thank you.
Okay, then. So we have a few things here before we jump into the article. We have a special guest panelist here tonight, Mr. Eric Guthrie, and he is, of course, an Inner Circle member. So welcome to the panel tonight. Just got married, so congratulations again. And new author. Or, well, I know you've already written a book, but you have a new book that's out called Blockchain or Die. So tell us in a few minutes what's in the book, how we can get a copy of it, etc.
So thank you. And thank you for having me and all the other panelists. Blockchain Die, which you've been hearing about this for many months now, is finally out. It's more than a book. It's a resource. It's a trainer's manual. It's a lot of things combined into one. I didn't want to write a book you just read and then that's it. You just left with, what you just saw on the words in the paper, but you didn't really have anything else to do. So each chapter ends with the success strategy action items section, which gives the reader specific actions they can take to learn more about the blockchain or cryptocurrencies, because the one thing is to read it, the other is to actually use it. And that's where I think there's a huge gap between understanding it because you're reading it and understanding it because you use it. And usage is really where the reader will get advantage from reading my book, because I teach them how to use it. That's the one thing. The other thing is the end of the book ends with a resource guide with a whole bunch of websites, books, articles, blogs, YouTubes, social media sites that they can visit and learn more about it based on the type of learner they are. I mean, if they're more visual, they can use YouTube. If they like to read blogs or posts, they can use the Twitter, or they can use the Reddit, or they can use the Telegram. So however you learn, the book is designed for you to focus on that area. And then that way you can begin to experience the blockchain through, your own preference. The bottom line is there's so much information. It's like drinking from a fire hose, from a fire hydrant, right? So I try and focus it and make it so it's more manageable for you to learn, whether you're new or whether you're still getting more information out of it. I try and focus it so it becomes a more positive learning experience for you through usage, through resources, and just through general knowledge that I put out there. It's available on Amazon. I actually did become the first African-American author to be published on a blockchain. It's called Publica. And I managed to get published and did an ICO on the blockchain through Publica. So that was something I really was trying to focus on, being a leader in that aspect. So that was one of the things that I really accomplished. And now I'm starting to do a book tours. I've been in the Carolinas. I'm heading to Bangkok in Brazil I'm going to do a whole bunch of book signings in the DC area, and I'll be in Atlanta as well, New York, Texas, Florida. So I got a whole bunch of book signings lined up. So I'm going to be a busy man for the next 6 to 9 months.
And Corey is saying ATL. So Corey Henry, you guys are working together?
We can.
Okay, well, I'll
sure
connect the two of you. I'll connect the two of you. So, you know, one question that I have for you is somebody may hear this and say, wow, I want to do what Eric is doing. I want to write a book and be a speaker and fly to Bangkok and all these other places. Would you tell people a little bit about that life, how you actually become a blockchain influencer and get booked to, you know, to do these things?
So I learned this before the blockchain, my first book, Diversify or Die. Because I tried to do public speaking before I became an author, and I was woefully unsuccessful.
Mm-hmm.
You need a platform, and you need more than a platform. You need a successful platform that shows you have the credibility and that you can take something from concept to completion and then communicate it.
Mm-hmm.
If you can't do that, they really don't want you to be a speaker. At least nobody credible does, and they're certainly not going to pay you for it. So the first book showed me how to do it, and I did it in a way that it was kind of like me testing the waters. But I learned a lot from that experience. So now this one, Blockchain or Die, I took the experience from Diversify or Die, the experience from doing all those trainings with, you know, on the blockchain technology through GBA. And by the way, I do mention blockchain consultants in the book a number of times. So I give props to my people in this book. And then you just have to go out there and you have to submit your book for press releases. As a press release, it was the #1 bestseller on Amazon for the first week. But I got to keep that going. So I got to keep doing marketing. I got to keep promoting. I got to keep, you know, getting the name out there, getting the book out there. And you got to submit for conferences. And you got to submit to be a speaker, to be a panelist. You have to submit to do a lot of stuff. But even all that being said, being a panelist doesn't really make you any money. It's when people approach you and say, hey, can you consult? Can you train? That's a really, you know, that's where your income comes from. Because I don't make much money selling the book. The book is like the super calling card. The book is what has people come to me and say, hey, I want to engage you. Going to different countries, I use my network. When I travel around the world, when I meet someone, I say, you know, I'm going to come back and I want to do a training or a book signing here. Can you work with me? And I got a Morehouse brother in Bangkok that's an attorney. He's doing it for me there. I just reached out to some contacts in Brazil, and they're doing it for me there. You can even do stuff like go through AmCham, the American Chamber of Commerce, which is in most countries, and make that relationship there and start doing, speeches and trainings there. So there's no one way to do it, but there's many ways to do it. You just have to say, I'm going to do it. Here's my platform. Reach out. I mean, it takes 50 phone calls to get 2 bookings, and that's something that I learned from a colleague of mine, Willie Jolly, and he basically said he would at least make 50 phone calls a day to get 1 or 2 bookings, and that's a lot of work, but it takes that amount of concentrated effort to get that kind of result.
It is, and he now, of course, has people calling him. He's pretty worldwide now. But I love Willie Jolly too. I knew him many years ago. So do me a favor, Eric. Hold up your book for me again. Okay, and then turn it on its side like this for me. Okay, so you can see Eric's book there. It's big. You may think, oh my goodness, the only way that I could get, credited as an author is if I write something 300 pages. So this is my book here. A little bit of a plug for me. This book is about 113 pages with super big font, right? And what Eric is saying is true, but you don't have to have the huge 300-page book. You can have something literally as small as this.
Yeah.
Now, I wrote this in order to start getting speaking engagements, and I did get paid speaking engagements across the country. I just didn't like the travel, and I'm perfectly, fine with saying that. However, I send this book to my prospects for my business plan writing company, and I make six figures a year, because people get this in the mail. They're like, oh yeah, okay, she's serious, So what Eric Guthrie is saying is absolutely true with regards to people. You won't make money from the book itself, but you make money from the consulting opportunities that come from it. So we have a friend of BBC named Linda Griffith, who helps people write their books in 90 days. And as Eric was talking, or G as I should call him, as G was talking, I was looking for Linda's website. I'm going to, at the end, announce what Linda's website is. So if you want to write a book, but you need some help with regard to how to write it and market it, then Linda is an excellent resource. And she is a friend of BBC. Speaking of books, I received this in the mail today. This is Blockchain Basics by Jacqueline Hayes.
Yay.
She is a BBC member, BBC Inner Circle member. I'm so proud of her. See, this is her small book here. It's a teen edition. Go Jackie. Nice big font here. But I started reading through some of it. Very good content. Her book is on Amazon as well. So we want to support Jackie. If you have not gotten a copy of Jackie's book, Blockchain Basics Teen Edition, you can go on Amazon and get that as well. So we definitely want to support Jackie as an author, for her book. So anything else, Talisha or Eric, before we get started with tonight's discussion?
I'll say two more things. One, I have Blockchain on sale, the e-version right now for $9.99. So I'm gonna keep it on sale to the end of October. So if you want to jump on an ebook, then now's the best time before it goes up in price. They're actually telling me I should make it higher. I said no, I want to keep it lower for my people as long as I can, so that way they can get the knowledge without spending a whole lot of money. So if you're an ebook reader, don't delay, order now. And the second thing I'll say is, my first book, Blockchain Diversifier Die, was like about 180 pages, something like that. So it wasn't very thick. But as I was writing Blockchain Die, just more and more information. I just felt like I had to communicate so much more. I did not intend for it to be 313 pages. Not even close. Because it becomes more expensive. The printing, the spine, the book cover, everything, the bigger your book, the more expensive it is, period. But I felt like I was shortchanging the reader, especially in readers in our community, if I didn't include information that would be beneficial to them. So I'm all for a book you can read real quickly. Basically, it's a book. No matter how big it is, no matter how small it is, as long as it's good, and it's got a good message, it's a book and it'll serve you well. So, like Sri was saying, don't feel you have to write, something like this. Even that surprised me. When I got the shipment in, I was like, this is heavy. What the heck? Because it's so big. But get your message out there and we will all support you. Blockchain consultants, I will, Sri will, all the panelists will. Just get it out there and just make it happen. And then you'll, be where you want to be.
Yeah, we want everybody to be an influencer in their own right and in their own lane within BBC. So absolutely. So Corey said, Black Blockchain book tour coming soon. So
Good.
I don't know, all of a sudden, the group is about to blow up with authors and speakers and consultants, etc. So, so proud of everybody and all the work that you've been doing. Okay, so let's talk about tonight's article. which is in regards to blockchain mortgages could help the impending recession. It's by Bizer Dimitrov. And this is a Forbes article from September 18th, 2019. So he says here, lately there's been a lot of discussion about a potential new financial recession being at our doors. All the signs are already present, from the stock market being shaky and the US economy being sluggish, the European banks on a downward trend, the China and US trade war continuing to linger, and the Federal Reserve cutting interest rates for the first time since the last financial crisis. Just a few weeks ago, the U.S. Department of Treasury announced the housing reform plan, in which they want to place the government-sponsored Fannie Mae and Freddie Mac back into private hands. Fannie and Freddie, the two largest mortgage guarantee businesses and government-sponsored enterprises, were taken over during the 2008 housing crisis and have been government-run ever since. All these events add up negatively as the impending recession gets closer. Today, there are many parallels that can be drawn between our current economic environment and the previous financial crisis, but there is also a significant differentiator. In the midst of the previous crisis, a new technology had just surfaced and given rise to the wave of new financial markets and economic rules. We call it Bitcoin and blockchain world. So they talk here about what could have been done differently back then if we'd had blockchain and distributed ledger technology in place. So we live in a social media driven world that sentiment can be twisted seemingly overnight. Even Google recognized the spike in searches for the term recession in August. So can we trust software over humans when dealing with opaque and inefficient mortgage origination systems? What could be the benefits of tokenized real estate and the issuance of digital mortgages or mortgage-backed securities on the blockchain? During the last few years, we have seen a significant change in the mortgage space. We have seen the rise of non-bank mortgage lenders in a field largely dominated by traditional banks. These non-bank lenders are usually more flexible, offer better fees, and rely heavily on new, smart, and advanced technologies. So they have here the top 10 mortgage lenders, including Wells Fargo, which is traditional, Quicken Loans, which is non-traditional, and then this is probably Bank of America, Chase, and then Loan Depot, which is non-traditional, PHH Mortgage, Fairway, Guaranteed something, Caliber Home something, and then US Bank. So non-bank mortgages are very, very close in terms of lending to traditional bank lenders. And you guys can stop me at any time that something piques your interest with this article. So what are the current issues in the mortgage space? To start with, it is a heavily manual and paper-intensive process which can take 45 to 60 days. The average mortgage application is around 500 pages and can go up to 2,000 pages. On top of that, there are so many intermediaries, brokers, appraisers, attorneys, writers, agents, and agencies involved in the process, and each of them adds 1 to 2% of the total property value as a cost to the real estate transaction. In an environment like that, a new blockchain and smart contracts process can thrive. For example, we can have the closing process almost entirely automated by smart contracts with minimal involvement from attorneys. We already have platforms like OpenLaw and Clause that present legally enforceable smart contracts and can automate similar processes. Another area that can be explored is the 45 million Americans without a credit score. Currently, this is an untapped market for the banks, and one way that can be resolved by establishing a digital credit score. So of course, we know that this affects a lot of our people. having either no credit or not enough credit, et cetera. So we want to come back and talk about that. But you can have a digital credit score. This evolves around developing new methodologies to calculate a score based on the digital footprint and social signals of the individual. Having blockchain as the underlying record-keeping technology will present an immutable and trustworthy record proof. The rise of the digital identity platforms that run on a blockchain will help with validating applicants' identities on the blockchain immediately. Actually, I want to stop right here because I think that this is something that we should talk about from a social point of view as well as an economic point of view. I could see good and bad with this. You know, the good is everybody that I would say is below 50 years old is pretty much online. They pretty much have a digital footprint. Very few people don't. Very few people live totally off the grid. However, this could be used to say what you do in terms of the types of websites you go to, the types of postings that you have, could negatively affect your digital credit score. So I'd love to open it up to the panel in terms of economically, how this could work for Black people and against Black people, and socially, what are some of the constraints that we may need to be cautious of as they're talking about this.
Okay. I don't like that. And I'm just gonna I'm just gonna flat out just tell you, you know, one of the points that they touched on in the article that they said was, and this is funny because I love to get Talicia's take on this, when they said, "Can we trust software over humans?" I'm immediately looking at Talicia and wondering what she's going to say on this. As someone who codes these things up. Okay, it depends on who's doing the coding. Okay,
that is true.
Yes. Yeah, and what ethics are they bringing into this? That's a big concern of mine, and we already see this. See, this is what already happens. So we already see this with Facebook. We already see this with Google. We already see this with YouTube. And you know, Dr. Boyce Watkins will talk about this, how he'll post something, and it really, the intent behind why he's posting it is not at all malignant or anything like that. And then it gets removed, it gets shut down, he gets banned and that sort of thing. And why is that happening? Well, it's happening because of the people that are there and what sort of ethics that they're bringing and how they're viewing this. That's where this could go wrong if, you know, it doesn't have more of us in the room that are there of creating this from the ground up, where we're going, no, hold on, I understand, but you know, that person posted this, you know, this is what they meant. This is not to be, so that's a concern of mine, is if we go too far and we allow too far for this to happen. And, you know, to me, it could just be opening up Pandora's box, but, you know, that's part of it.
Again, now I'll be the other side. The first thing, again, we have to define what we're looking for. And again, this is one of the things that we talk about pretty much all the time, is the recreation of the systems that we currently have in a digital world. That's the problem. We're using the same old thing just in a new way, which isn't working. We've seen this over and over again. Things that work now are just not as viable because of the technology that we have. So creating a quote unquote digital credit score, is it going to be using the exact same parameters and variables that are being used? How would that serve if you couldn't get in the other way? How are you going to get in the new way, even if there's another variable added to it? So I think that's where we have to have an understanding that we have to look forward instead of always looking back. So maybe it's not a digital credit score that we need to be viable anymore. Maybe we do need another parameter in which to decide how we validate who can get what. And then again, it goes into who is making those decisions. This becomes a very important part of the Libra cryptocurrency, that using of the underserved communities. That's what they love, that term, because that's what everybody wants to do. There is a large amount, if they said 45 million in the article that is showing you that there's a large amount of people that don't subscribe to the old system. So trying to force them into a digitized old system is not going to work. So we're going to have to find other viabilities. But because we are using the technology, this is where the data and the metadata become very important. It's not just a stagnant, okay, ones and zeros here at this point. It is viable. It has some context to it. So where you go, what you're doing, where you're spending your time digitally is very valuable, not only to you, but to other individuals. So how do you monetize that? And how do you leverage that for your own better benefit?
Talisha, I'm very...
I know.
I get it. I get where you're going, but
we're going there. So you have to find a way. You may not like it. And people are always going to buck that. Like, yeah, it's uncomfortable. But at the same time, it's like, this is where you have to make that decision. Yes, I'm moving into this space. How do I make myself viable? And how do I use this for my better benefit? And this is where we need to have each other in this space, because this is what happens if you're scared and it's like, oh, well, I just don't want to participate. You're going to be forced to participate.
I agree.
If you're not there in the beginning, you don't have a say. And then this is where you're kind of just steamrolled and just like, well, this is how we do electronic records. This is how we do mortgages now. So you just have to do it or you won't get one. You don't want to be in that position. So we do need to have this dialogue in order to have those kind of conversations of where we fit and what we can do and say, yep, that's not going to work for me. I do need a new algorithm because I don't subscribe to those sites. I don't do things in that way. So what do? You need to be that person who's kind of driving the conversation and being a part of the requirement rather than person just who has to, just kind of adhere because you're left behind.
Okay, yeah, so that I agree with. That I agree with. Okay, now let me just say, because Corey put something in there, and he's absolutely right. China's already doing this with that whole good person score. And
I had forgotten about that, yeah.
But they're doing it, again, with no incorporation of their society. They have come up with their own metrics about what they're looking for and how and what that caliber is going to be. So it's calibrated upon their own universal aspect. So it has no input whatsoever. These individuals are doing that solely with their own, with their own agenda. So that becomes the issue. You don't want to do what China is doing, looking at everybody and then assessing like, oh, well, you look like a criminal, so therefore you're a criminal. And it's denoting that for them. So I'm saying this is why there is a need for us to be a part of the process by which those algorithms and or the standards are actually adhered to. Because again, we can make those standards now because it's our data.
Yeah. See, I want to practically say what Talisha is saying is there are two parts to this. Number one is activism, meaning that as we start seeing companies actually putting this in place, having some people being seated at the table to say on an ethical basis, how do we protect our people? Just like the Hispanics are hopefully probably have people there protecting their people. The Asians are going to have people there protecting their people. We need to have people in the room protecting our people. And when we say our people, we mean the Black bourgeoisie elite as well as Pookie and Ray Ray. So, let's be real across the board. Number two is we need to have Black people who are testing these algorithms as well. There was a story that we heard of where, I can't remember what it was, what company it was, but they had the facial recognition software. They only had white and Asian people tested out. And as soon as the Black person tested it out, after they were done with beta and they put it out, Black person tested it, it came back that they were a gorilla. Because nobody had, there was nobody who said, hey, well, let's get Black people in here to test this in the alpha and beta version as well. The final thing that I will say is your digital credit score could end up being another redlining tool. Let's be honest. If you spend the majority of your time in certain zip codes, in certain areas, things like that, it may say on your digital credit score, such and such a person, uses or accesses online services in this area 90% of the time, therefore, blah, 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 blah. So Eric was right about one thing. He said, it depends on who's coding this, and not necessarily the person that's really, really coding it, but the strategist on top of that, and how did they take that information and that data and use it. Eric, I don't know if you want to jump, Guthrie,
Yes.
if you want to jump in and say something.
So I'll make two general points. The first is, when I read that kind of article, it romanticizes the blockchain, right?
Mm-hmm.
That kind of thing is not going to happen for 10 years.
Mm-hmm.
The amount of legal regulations that has to pass through in various either state or federal jurisdictions, this is not going to happen anytime soon. This is just the article that he wrote to get recognition and say, hey, I wrote an article about blockchain technology and real estate and mortgages, and I am an innovator. Okay, yes, that's true from a hypothetical standpoint. But the bottom line is, if this happens before 2030, I will be shocked. That's number one. Number two, and I think we've all of you have made this point in one way or another. Why be the community that sits back and let them code or dictate the way that the technology affects us? Let's invent it ourselves. Mm-hmm. Let's create it ourselves, and that way we are in the driver's seat, and we can tell them how it's going to operate. You know, and if we can raise the capital, if we can do the marketing, if we can put together the business infrastructure, no one can tell us how it's going to operate, because we're going to tell them how it's going to operate. And even if they buy it from us, we've designed it in a way that it's helping our community and being inclusive to the entire world, not exclusive, because they only look at it from two different racial perspectives. Mm-hmm. I mean, this is an opportunity. The chart that Talisha put out there, it is so accurate. You know, the innovator and early adopter, we're in that phase. And we can not only make all the money, but we can make all the difference if we can jump on and put the energy and the time in now to make it worthwhile 10, 20, 30 years from now for our kids and for our grandkids.
Absolutely. The only thing I might push back on a little bit is with regard to the regulators. There are payday loans and all sorts of stuff out there like that now. I don't necessarily see Wells Fargo being the first jumping in, but it wouldn't surprise me if there is some little rinky-dink, you know, what do you call it, subprime mortgage company that starts with something like this. And then, you know, it kind of balloons from there. So, you know, because that's how these things start. They start with something really small, and, you know, and then it grows from there. And the next thing you know, like Eric Guthrie is saying, then some big company has purchased it. And one of the other things that was in the article was about each time an intermediary touches a piece of paper, it's 1 to 2% of additional fees for them touching that piece of paper. One of two things is going to happen. Either the fees are going to go down drastically for you and I, the consumer, or the profits are going to go drastically up for the people who built this platform. One or the other. It could be half and half, but I doubt it. One or the other. So, in fact, it wouldn't surprise me if the fees stay high just for the convenience factor of someone being able to do all of this stuff online, you know, or through their phone and get a mortgage through their phone. So Corey Henry is saying both. Go ahead, Talisha.
I think there's a part that, again, we forget that things are built in silos at this point. We're still building pieces of software that are really created in this, like, this little myopic portion, and then they're being utilized in other places. So once we have these little modules here and a little module here, once a company starts to collect those and actually use a synergy to get them together, this is where we have the quote unquote product, when it's really kind of a piece parted thing. And I think the fees are transferred in there because every time there is a hop from a piece that is not made from it, it needs an API, it needs some back end kind of, you know, integration. This is where those fees kind of will be coming in, unless, again, somebody just takes it over and buys every piece of it and then puts it together. But I do think we're seeing some of this now. I think the article mentioned SoFi and just little things, but I think this is where we're moving. And again, it kind of represented the whole underserved community thinking about that 45 million people, if 45 million people ask for something, I think somebody would say, yes, I will build that for you. So in the sense of always thinking of being the underdog, a 45 million collection of anything is pretty large. And in the scope of what I would like to see, how I would like this, how would this impact me? And they always say, what would Jesus do? Or what would I do? How would this affect me personally? That's how sometimes I think we need a change in our attitudes toward what we're looking for, and maybe being more vocal, not even in the activism, just I need a product that does this. We spend so much time in the digital scenario, but we don't make it any customization for ourselves. This is a prime time for customization and to be very vocal about what you want to see and what would serve you, because people are listening to build those things for you.
Yeah. So let me continue on with the article here. So he says here, I strongly believe in the tokenization of real world assets. Until now, we see a myriad of financial assets like fiat currency, shares, bonds, and stocks being turned into their their respective digital copies on a blockchain ledger. We already see live examples of digital securities in the financial services sector, but the big opportunity is the tokenization of real estate. So when we have our real estate tokenized on a blockchain, the origination of digital mortgages will become the natural choice due to the greater visibility and increased liquidity of those assets. So what he's saying here is with the increased liquidity, meaning that the mortgage itself can be sold a lot more quickly or a lot more easily on the market or in the market to its next owner. Once we have tokenized real estate and digital mortgages that are originated on the blockchain, the issuance of mortgage-backed securities on the same ledger will be seamless. One way of doing this is for the lender to issue a security token to de-risk and possibly make money. The other option is for borrowers to issue a token in order to raise capital for initially buying the asset. So this other way for borrowers to issue a token in order to raise capital for initially buying the asset, that's what we're going to be talking about on December 4th during our virtual conference. How do we do that? The digital transformation caused by blockchain and DLT will have its impact on the mortgage industry, but it might take some time. We already see steps in that direction as startups are currently issuing $85 million in loan originations per month, but it will take years until the important participants like banks are fully on board. One thing we know for sure, the sophistication that blockchain tech and smart contracts bring will lead to huge operational cost savings and the opening of new untapped markets. So I wanted to make one more comment about something I read here. Oh, yes. This will also be a way for people who are investors to start investing in mortgages as well. So we are thinking about it in terms of getting loans, but we also want to think about it in terms of other ways where we will be able to invest in properties. Now, I don't know what the SEC laws are going to be like in regards to accredited investors, unaccredited, blah, blah, blah. We have Mr. Guthrie Esquire here if he wants to say anything about that. But I would be on the lookout for how blockchain and this use of tokenization of assets is going to change how investing is done on a family level and an individual level. So I'm going to open it up to the panel with regards to anything.
Well, as for the investing piece, the SEC has made it clear, which I have it many times in my book, that they are not changing any definitions or processes for the definition and use of a security. The way they define it based on the Howey test is the same, and it's not going to change. Okay. So using a token as an investment in the blockchain for a mortgage will be the same as if it was off the blockchain. That being said, the SEC and the Federal Reserve, everyone was stung so bad in 2008. I think they will look at tokenization with a very, very slanted eye. And, with concern that they were using mortgage-backed securities, which was basically a very new security, or if not new, very, very underused in 2008. And look what happened then. They blew up. Everything became, billions and billions of profit. And then the whole thing imploded because they were selling properties to people that couldn't afford them. Mm-hmm. Governments tend to overregulate once they've been stung really bad. And that was $1 trillion sting. So I don't see them looking at this with a very optimistic point of view for quite some time. I'm glad he said that in the article, that it's going to take years for this to happen, because I think that's a very realistic point of view. Maybe not 10 years like I was saying, but it's going to be quite some time. And you may see little pockets of things happening, like West Virginia for voting. They did an expat vote mm-hmm. in 2008. Right. And not 2016. And actually, I met the Assistant Secretary of State for West Virginia a few weeks ago at a conference. I told him in my book, he was excited. He bought a few copies. And they're going to do another one of those. Even though all the news said they weren't going to do it, they're doing another one for their next election. But everything's happening in little small pieces, because when you do it in small pieces, your mistakes are small, mm-hmm. right? And it's not until they get really comfortable expanding it at a very, very slow pace, but a comfortable pace, that they begin to make it a bigger project. And that's exactly what I see happening with this whole mortgage thing.
Yeah, I would say I see the same thing, but from a reverse engineering, from a software perspective. I see bits and pieces of it actually exponentially growing. So again, the manual things that are truly just cumbersome, the intermediary portions, the things that aren't really tokenization, but just true hardcore processes that require automation, are going to be really expanded immensely, because it's just time. Everybody is tired of having to do with paper, and most people just don't want to do it anymore. That's just what happens when people are like, I'm not going to do this unless you offer it to me in this digitized form. And then we're having these processes where they're being mandated, just like how healthcare information was mandated to be made electronically. I think some of this mortgage information is going to be pushed to that state. And then subsequently, so many pieces of it are going to be automated that the next piece is, okay, we're just left with this little kind of left out piece, and it'll be the outlier that then they'll have to make some regulation that'll do that. And I think by that time, it may just actually happen at a nice time where they meet at that middle. But I definitely think there's a large portion of the mortgage process that is going to be automated in the next 2 to 5 years.
And that makes sense, because the capitalist that I am, I just see the increase in profit that's available. I'm not so sure they're going to be passing savings on. It's just me.
Yeah, that might not
but
be.
The increase in profit, the decrease in mistakes, things like that. Yes, as soon as they feel comfortable that blockchain is the viable option and viable solution for this, yes, you'll start to see a lot of these companies. The other interesting thing is that with blockchain, as soon as all of those property records are included on the chain, then there's not a lot of need for title insurance, for example, or some of these things that, has a propensity for mistakes because of human error. Like once it's on there and everybody agrees, through consensus that yes, this information is correct, then the next time the house is sold, you won't need necessarily to reconfirm all of those historical data points, because they'll be there. They'll be there on the chain. So, Spence.
I had a question, and it's actually towards Eric, and I wanted Eric to kind of his thoughts on this. How do you feel? Because SEC Commissioner Hester Pierce, she seems to be very crypto friendly, I guess you would say. And she recently came out with a comment, it was a few weeks ago, where she said that digital assets that she believes eventually will become the money of the internet. How do you feel with her? Because it seems that unlike, where we've seen before, we do have someone in the SEC who seems that she's much more trying to ease back regulations so that they do not slow adoption of the technology. But I'd like to get your take on it.
So it's a good question, Eric, thank you. About 2 months ago, I attended an SEC open house where they had, I don't know if you guys attended that one, but it was actually very informative. And she was there, a bunch of deputy directors were there, some folks from the private industry were there. And the general tone, which was surprising to me, was very blockchain and crypto friendly. So I was really relieved to see that. And I was glad to hear the conversation was, we are willing to work with you. There was a big however. The big however was, we are going to enforce the law. We're going to protect citizens and we're going to be protecting investors. And no one's going to make us do anything sooner than we want them to do it or that it should be done or in a way that we don't approve. So it's a positive message, but one where the SEC is still in control, right? I mean, and I mentioned this all in the book, there are a whole bunch of SEC enforcements, and I mean a whole bunch, but they are just taking out bad actors left and right. Mm-hmm. And some will argue we're in the gray area. Didn't matter to SEC, they still, they still went through with the enforcement action, and they still made them either pay back the money to the investors or shut down their shop, and some even got criminal charges, right? Mm-hmm. So right now, I would say that I'm in about 80% agreement with the SECs from what I know of their language, their enforcement, and the way they're dealing with this. But administrations change, people change, and if something goes real sour with this technology, they may change as well. Mm-hmm. Right now, I think we're in a very good space, and I think it's helping the markets.
Right.
If they had come out and just put something that was very draconian towards cryptocurrencies or blockchains, it would have probably crashed all of the markets for at least some point in time. Mm-hmm. It already crashed in 2018, so it could have been worse. Mm-hmm. But I think the SEC is doing the right thing for now.
Okay.
Well, we're almost to the end of our time, so I want to let everybody go say some final words, and then I have a couple of reminders for people. So, Talisha, why don't we start with you? Final words, thoughts on tonight's article, or anything else you got on your mind?
I would say this is, again, we're having the conversation, I think, and that's very important, but I also think that we always have to keep in mind that we don't want to recreate something just because it's the way it is now. I think we have the opportunity, which is phenomenal, to actually change things and do things on a very different caliber and with a whole lot of different credentials that we can actually have a part in the say of. So just trying to, again, to digitize something just because it's not the same thing anymore. We're well past that part of the information age. We are moving into an aspect of value, and how that value and for whom that value is best created is something that we need to keep in mind.
Great. Guthrie?
So once again, thank you for having me on this panel. Everything we talked about in this conference call and on this webinar is actually in the book. Corey has a question about what about art?
Yeah, art's going to be,
it's in there. It's going to be huge for every industry, but I echo Talisha's comments about, which also I talk about in the book, don't just create it just to create it, mm-hmm. right? Have it be meaningful, have it be innovative, and have it solve a real problem. Don't have it just be something you want to create just to create it, because in the long run, that just hurts you, and it hurts also the industry, because it's like, well, everyone's creating all this crap. Does that mean that, is anything worth it? No, create good, meaningful solutions that solve problems, and the recognition, the money, and the clients, and the consulting gigs and speaking gigs will come your way.
Spence?
I'm just going to echo something that Alicia and Eric just said, and that's about, this technology does give us the opportunity to recreate things. Yes, let's not just do it the exact same way that we did it before. So then we end up having, oh no, we just have a new version of the old problem again. Like, what good is that? This is a conversation that was making me think about it. Man, like, how incredible would that be if we were looking at creating someone's credit score and how much that person gives to charity or ties to their church was something that was actually ingrained in. And you think about it like, wow, like that would, I mean, I don't know about you guys, but I would feel happy, living next to someone and that knowing that that person is a very charitable person and that sort of thing.
Mm-hmm.
But I guess it would be, yes, us adding those new ideas, into the technology, into the new thing that we're creating, So yeah, that was it. Just picking back up on what they said.
Yeah, so I think that tonight's conversation was enlightening. This blockchain space is huge, and you all know what I say. Pick something, pick a niche, dive deep, pick a major, as I've also said. It's time for you to really start thinking about what you want to be known for, and really getting involved. And as Talisha is saying, find something that's worth solving and then bring it to the group as well, because we'll be able to chime in and maybe give you some other directionality and pathway. Now, it was interesting, that article is about the impending recession and how blockchain mortgages could help. Outside of the fees reducing, I didn't see much in there about it helping with the impending recession, unless we're saying that, people could put money into mortgages that the banks wouldn't lend to, or the banks would not fund. But yeah, I just realized that. I'm like, that article didn't say anything about how it was going to affect the recession, but it does bring up some points in regards to how blockchain is going to be used with real estate mortgages in the future. So next week's topic, which is Wednesday, October 16th, 7:30 p.m. Eastern Standard Time, is the rise of the stable coins. The rise of the stable coins. So you talked about the SEC commissioner talking about the money of the internet, that crypto is the money of the internet. Well, this is going to go right in line with that. A lot of these Fortune 500 companies now are starting to come up with their own stable coins. And we're going to talk about the good and the bad with that. So it's not just Facebook Libra anymore. There are others that are doing that as well. Again, if you want to join Black Blockchain Consultants, we'd love to have you. Come to blackblockchainconsultants.com, click on the membership button, and you can find all the information there. And also, we're trying to get our YouTube numbers up. So if you are a person that loves YouTube, please subscribe to our YouTube channel, blackblockchainconsultants.com. Okay? Thank you so much to everybody. I hope you have a great evening and a great week, and we will see you next week, same time, same place. Night, everybody.
Good night, everyone.
Good night.